Hey there. We're going to talk about a potential banking crisis that may have just begun in America. Now, I know that might sound alarming, but hear me out because the evidence is undeniable. Silicon Valley Bank, the 16th largest bank in the US, has failed, and depositors are pulling their money out in a frantic rush. The Federal Reserve is pulling money out of the system, and the money supply is contracting by 2% year over year. This is the first time this has happened in nearly 100 years, and only the fifth time in US history. Well, it means that a deflationary depression could occur, and it's essential to take steps to prepare. It's important to note that the Federal Reserve took action when the pandemic first hit and suspended the reserve requirement, meaning that banks are no longer required to keep a certain percentage of their deposits on hand. This means that a banking run is more likely to occur during a banking crisis, which could have disastrous consequences for the economy. Despite the current inflation, there is a risk of a shortage of dollars and cash in the system, which could lead to bank runs starting in Silicon Valley. This is why banking stocks like First Republic Bank have dropped so much in the last 5 days. Investors are concerned that other banks could experience runs, particularly those exposed to tech, as the tech industry is facing a difficult period with many startups and companies in need of cash attempting to withdraw it from the bank. Banks play a crucial role in the economic cycle, and when a banking crisis arises, it leads to a contraction in the money supply, which we've seen happen 4 times before in the long depression of the 1870s, the panic of the 1890s, the depression of 1921, and the Great Depression. Each of these instances saw unemployment rates reach double digits, deflation, and a significant contraction in the money supply. Now, the signs are pointing to a potential banking crisis, high unemployment, and deflation coming in 2023 and 2024. While we're not guaranteeing it, it's always better to be safe than sorry. To prepare for this possibility of deflationary depression, it's recommended to hold cash in a safe, secure place rather than in a bank. Banks are not safe when everyone else is trying to take their money out. It's important to have a financial safety net in place in case of an emergency. Having a few $1,000s in cash kept in a safe place in your home can help protect you if the worst were to happen. The Federal Reserve and government may be able to provide a bailout and inject money into the economy, but this could take some time and things could get messy in the meantime. Now, I know some people may write this off as just a tech bank in California that had exposure to crypto and tech startups. That's not going to happen everywhere else. But Yahoo Finance underscores this point by highlighting that the biggest US banks are now much stronger than they were in the lead up to the last big banking crisis in 2008. This is because regulators have forced them to hold more capital, pass stress tests, and have more diverse funding options during difficult times. So, what can you do to prepare for a potential banking crisis and deflationary depression? Diversify your investments and not rely solely on banks. Consider investing in other assets such as real estate, precious metals, or even cryptocurrencies. It's also wise to have a cash reserve stored in a safe place. Finally, stay informed and keep an eye on economic indicators. This includes monitoring the money supply, interest rates, unemployment rates, and any potential signs of a recession.